The title's not clickbait. I've sold all my stocks, I've sold all my crypto, and I'm going to tell you why. I also think there's a chance coming up right here to make a comical, stupid 10, 20x's on a lot of coins that I'm going to show you in this video as well. But the point of this video and why I'm not getting into jokes, why I'm being very, very quick right here, is because I don't think you're going to have a lot of time to make a decision right here. I think the market is going to do this right here, which is exactly why I've sold everything right here. And you can do what you want with this info.
The marketplaces for cryptocurrencies are typically unstable. As of this writing, Bitcoin, BTC, the biggest cryptocurrency with a $550 billion market worth, is down 47% from the all-time high of $69,000 it reached only 6 months ago. Perhaps the decline in the Bitcoin market surprises you. However, for experienced traders and market watchers, crashes are frequently preceded by recognizable patterns and indications. Traders and market analysts can assess the mood of the market in one of three ways, depending on their disciplinary background and methodological conviction. Global indicators. Technical examination. Analytics on the chain. Each strategy uses a different set of data, yet they are equally effective in forecasting market changes. Although Bitcoin is sometimes promoted as a non-connected asset, allowing investors to protect themselves against the traditional market, recent data showing that Bitcoin is strongly correlated to equities refutes this claim. And Bitcoin's correlation to traditional finance is bad news at a time when the macro conditions, inflation, monetary tightening, equities, etc., are adverse. What central banks are saying you and how the market responds to it are, in my opinion, the two most crucial things to pay attention to. Extremely strong correlation exists between Bitcoin and Ether and the Nasdaq, and I don't anticipate that to alter anytime soon. We are currently trading more macro than usual in the cryptocurrency market, according to Jonathan Cheeseman, current head of FTX Access, the institutional sales of crypto exchange FTX, and a former executive at Goldman Sachs, GS, and HSBC, HABC. In an April 2022 study from Arcane Research, the correlation between Bitcoin and the Nasdaq was at an all-time high of 0.70. Analysts use a scale of -1 to 1 to measure correlation, with -1 denoting a total reversal of price movement and 1 denoting perfect synchronization. Veteland, an analyst at Arcane and the report's author, stated to CoinDesk that the correlations across asset classes are in an extreme state, pointing out Bitcoin's record-breaking correlation to equities and concurrently negative correlation to gold and the US dollar index, DXY. He said, "It's unlike anything in the market." However, the link does not imply that Bitcoin necessarily follows stocks. Since there is essentially no temporal difference between Bitcoin and stocks, they typically rise or fall at the same time. As well as occasionally rising or falling before the Nasdaq, Bitcoin. Perhaps it's due to liquidity, resting market orders, and more varying market maker reactions to news in the equities markets, but the big market makers in cryptocurrency have a less varying response formula, according to Lund. However, economic challenges are only one aspect of the story. One example is the very high inflation rates in both the US and Europe. How I view cryptocurrency and its connection to the macro. There are cyclical macro forces as well as structural macro forces, according to Cheeseman. He emphasized that structural macro pressures favoring decentralized alternatives and the de-dollarization of society are both positive for cryptocurrencies. However, there is a reason to exercise caution until the macro bullish factors begin to act. I would definitely advise folks to look forward with caution and patience. We may have passed peak inflation, but peak tightening is still a ways off, according to Cheeseman. Trading professionals use technical analysis, TA, which is the study of candlestick price charts. According to Josh Alzowicz, head of research at the digital asset investing company Valkyrie Investments, he employs Bollinger Bands, a well-known indicator of price volatility, to predict the future direction of Bitcoin. According to this tool, the current situation for the most popular cryptocurrency appears to be negative, he stated. The Bollinger Bands, yellow lines below, of the Bitcoin price expand or contract according to a mathematical calculation based on two standard deviations from the 20-period moving average, red line below. The average price over the previous 20-candle period is frequently referred to as the 20-period moving average. According to AlsoX, the graphic below demonstrates three things. Since 2011, volatility has hardly ever decreased to this degree. Volatility does not usually fall much further before a volatility expansion. Whenever volatility has fallen this much, it has always exploded soon enough. AlsoX said that based on the weekly Bollinger Bands, the market is bearish as Bitcoin continues to close below the 20-week moving average of $42,700 at the time of writing. Crypto traders, many of whom are independent day traders, prefer other TA tools. An anonymous cryptocurrency trader named EasyCharts told CoinDesk that he mainly examines the weekly closures and wicks of the price of Bitcoin to test a negative tendency. On the chart, the price of Bitcoin takes on specific shapes over time that indicate its direction. The market has recently recovered somewhat from its recent lows, but a very distinct bear flag is currently emerging. See the chart below. A bear flag is a technical analysis pattern that denotes the likelihood of further downward movement. We can see that the trend has been downward because of the macro double top we made, and based on this continuation pattern, it appears likely that Bitcoin will move lower in the near future, he said. Analyzing the chain to understand the bottom. The data is accessible on-chain for everyone to see since the majority of cryptocurrencies use public blockchains to validate and record transactions. On-chain analytics, which examines transaction data and cryptocurrency wallet balances to analyze market circumstances, have arisen as a result of this. If Bitcoin were to plummet, on-chain research might forecast how far it may go. Realized pricing by cohort is a measure made popular by WhaleMap, an on-chain analytics platform. The measure determines the typical price at which various blockchain wallet types, such as whales holding between 10 and 100 BTC, purchased Bitcoins. According to WhaleMap, monitoring those players' realized prices provides highly accurate signals of macro supports. According to the chart published with CoinDesk, the realized price for the 10 to 100 BTC wallet cohort has so far identified every generational bottom, the lowest price in each cycle, for Bitcoin. According to the data, the band is currently between $27,000 and $25,000. If the price of Bitcoin were to start dropping, WhaleMap stated, this should serve as a long-term support for BTC that we can be historically confident in. That's a big if, though, because there's no surefire way to know. Some people are bullish here, according to EasyCharts, the anonymous trader who provided the preceding quote with a bearish assessment. Without some being bullish and some being negative, there wouldn't be a market. If you liked the video, subscribe to this channel and watch other videos here.